Your call cannot be completed as dialed, is essentially what the government has told us this week. This week started the government shutdown, which has a trickle-down effect and affecting many different industries, including real estate and mortgages. So let's chat about how the shutdown could affect all of us. One of the biggest parts of the shutdown is that people who work for the government may be furloughed or held off of work or not paid during the shutdown period. So if you have buyers who are not under contract yet, who you know they work for some sort of government entity, now is the time to start checking with them and asking if they're going to be furloughed. If they are furloughed, we will be unlikely to close that loan for them because they are no longer getting paid and they may be permanently laid off. Hope not, but after this year, nothing would surprise us anymore. If they're already under contract, then as the lender, we will have to do verifications of employment to make sure they are not furloughed. And if they are specifically working for the government, we will have to do a day of closing verification as well. So they're not going to get around it if they're furloughed. If they are active duty service members, though, this will not apply to them. All active duty service members, sad as it may be, will be expected to continue to work without pay. Technically, their pay will be held until the shutdown ends. So while from a lending perspective, they won't show us furloughed for us and we can continue to move forward, hopefully they have been financially prepared, because if the shutdown continues for prolonged periods of time, who knows how much money they'll have left in their bank account to cover their closing costs. So another piece to start to chat with your buyers about if they are going to be a VA buyer or if they're already under contract. Another area that will be affected, whether your buyers are getting a loan or cash, will be flood policies. So flood policies are typically federally backed through FEMA. FEMA obviously will not be operating right now, so they will be unable to write flood policies. Your buyers will have to look for private flood companies, which there's definitely some out there. These typically can be more expensive. Now, from a loan perspective, Fannie Freddie loans, which are our conventional loans, will be largely unaffected. There may just be less staff available to answer their call questions, but for most of us, we won't see any difference with conventional loans or any of those type of appraisals. VA loans, again, may be affected more due to a staffing issue. A lot of loans, we do coordinate one-to-one with the VA, especially for special conditions. So you may have a delay in being able to get individuals on the phone for that from our perspective. Again, we shouldn't see active service members who are not able to close unless they are out of funds by the time closing happens in their personal accounts. But the big one that will be affected is USDA. So USDA is completely government funded for all employees. So they will no longer be issuing commitments until the shutdown is over. And that is essentially their clear to close. So if you have a person who is looking for a USDA loan and they're out looking right now and are not under contract, you may want to wait or do an extended closing time period, because depending on how long the shutdown goes, it could extend past your closing. If you have someone who's already under contract for a USDA loan, be prepared, whether you're on buyer side or seller side, that depending on how long the shutdown goes, we could see delays in that closing. Not that they won't be able to close in the future, it's just going to be shutdown dependent. So that's going to be our major player there, is USDA really. And then what everyone wants to know, what's going to happen to interest rates during the shutdown. Interest rates can go up or down during a shutdown. We have had 2 different shutdowns with 2 different results in the past, so it's a 50-50 shot. However, this week, rates have stayed stable, meaning they have not gone up. And that is specifically because we have no data reports that are going to be coming out during the shutdown to shift volatility. And the stock market's up and down. So it helps our mortgage rates, in other words. So we could see mortgage rates continue to trickle down slightly, but if they haven't already gone up with the start of the shutdown, hopefully we won't see them go up any this week or next week. But it's important to educate your clients about what the shutdown means for them and be prepared to be patient. If you need anything, DM me, message me, and have a great rest of your week.